we talk about a topic today, or I talk to you about a topic today that I have very rarely, if ever, delved into with the general public, with my general following. You see, the topic today is going to be on profit taking. And so profit taking is so special that up until now, I've always sort of just reserved the topic and the training on this point, or this part of the trading equation, for my traders, those who are in my programs, those who are actually trading my own capital. So that was one reason. It's a very special part of the trading equation, profit taking, as you know. But also, I've been reluctant up until this point to do it because profit taking is the art portion of trading. You see, every other component of the trading equation is actually scientific, or should be. Now, most people don't approach the trading equation as if it's scientific, but it should be scientific. It should be certain rules and certain guidelines in your trading plan set in stone as if it were a science. But profit taking is the art part of trading. It is where some level of creativity is allowed. It is where certain additional rights that the trader has to choose things come into play. Certain rights come into play in the profit taking area. And this is something that I hope I have time to delve into. It's that psychological side of profit taking, which makes it more of an art. But yes, it's not supposed to be scientific when it comes to taking profits. There are not supposed to be rules set in stone when it comes to taking profits. Those rules set in stone are more appropriate for your entries, for how you adjust your stops, for the rules that are based on when you add, when you decide to not take a play, when you decide to go into a play in a small way, or when you decide to go into a play in a big way. All of the rules that dictate those specific actions, they should be scientific, and they should almost never be violated. You should never deviate from those rules. But when it comes to profit taking, you earn certain additional rights to be more relaxed. When you're profit taking, you earn rights to choose. It's less rule based. There are rules, but it's less mandatory to exercise your profit taking rules. And so we'll talk about all of these things today. And what I promise you after the end of this talk, and we'll spend about 2 hours together today, is that by the end of this talk, you will have a far more firmer grasp on when to take profits, where to take profits in your trade, by how much to take profits, which is very important because sometimes it's appropriate to take all, sometimes it's appropriate to take none, and sometimes it's more appropriate to take partial profits. So we'll delve into all of that. And by the time you leave the presentation with me, I promise you, you will probably never see profit taking the same way. You'll never profit take the same way after this event. This, I'm hoping, will have a lifelong effect on you, an effect that will get you to do some additional things for the rest of your trading life, some additional things that will expand your ability to pull profits out of the markets for the rest of your life. So once again, guys, thank you for being here. And I'm not going to belabor things very much. So what I'd like to do is just jump right into, oh yeah, I do have my phone nearby. I need that nearby just in case my team needs me and something goes wrong. So yeah, let's get started. What I'm going to do is we're going to jump right into the presentation here. And I'm going to go back to, boom, I'm going to go back to the start of things here. So yes, so traders, as you know, this is a masterclass on taking profits like a pro trader. And I want to welcome you to this event. And every single time I'm given the opportunity to speak from a mic or from a stage, I really do my best to make sure that I leave you with something that can potentially affect the way you trade and the way you see markets for the rest of your entire life. This is the mission that I've made for myself many years ago, and I'm hoping that I can continue to execute on that mission today. We're going to talk about how to take profits. This is the ultimate art, as I said. Every other aspect of trading should be more scientific, but it is the profit-taking part that is actually art-oriented. Now, there are 7 parts of a trade, and when I take on a trader to train them from the ground up, we actually delve into each part of a trade, each of the 7 parts. Profit taking is one of those 7 parts. And this is one of those 7 parts that we're going to talk about and delve into today. Now, the first rule, we're going to break profit taking down into rules, traders. The first rule that I want you to be aware of is called the 30 to 50 cent profit rule. Now, this is not 50 Cent the artist. This is 50 cents in terms of dollars, okay? So let's get that straight. The 30 to 50 cent profit rule. Now, I want you to understand before I delve into this first rule that I am speaking predominantly from the eyes of an individual trader who's looking to make daily gains in the markets, daily profits. While this can be tweaked for a longer time period like swing trading or even investing, I'm going to speak today from the point of view of a trader who's looking to make daily profits, who's looking to make anywhere between $500 and $2,000 in a single day. All right. And so the rules are going to be tweaked for that style of market play. All right. And I will say this, if we're thinking from a charting perspective, we're thinking from a time frame of looking at a chart anywhere from 2 minutes to 5 minutes in duration. So we're looking at charts that are either 2 minutes in duration, each bar represents 2 minutes, or each bar represents 5 minutes, okay? All right, so I just want to get that out of the way first. Now, the 30 to 50 cent profit rule goes something like this. Look, assuming that you have bought an event that you're familiar with, events that my traders are familiar with are called elephant bars, tail bars, bull 180s, RBIs. We have a variety of events that I teach my traders to buy. Now, that's beyond the scope of our talk today. We're going to assume that you know when to buy. All right. This event today is going to assume that you know when to buy. But once you have bought an event that you have identified, and a mistake is to buy something that you can't name. All right. I do not allow my traders to buy something that they can't put a name on, because if you can't name what you're buying a thought, you're buying a feeling, you're buying an emotion. And these are the things that are not buyable when you are a professional. We don't buy our thoughts. We don't buy our feelings. We don't buy our notions. We buy specific detailed events that we know what they are before they happen. And so I'm assuming that you know your buy events. And so let's assume that you have bought your buy event. Profit rule number 1 is that you have earned the right to take partial profits after a 30 to 50 cent pop. I'm going to repeat that. Rule number 1, after you have bought your play, your identifiable event, you earn the right to take partial profits, not full profits. Please understand this. Partial profits. Never take full profits on rule number 1. Rule number 1, you have the right to take half. You have the right to take a third. You have the right to take a portion of what you have earned off the table after a 30-cent move or a 50-cent move. Now, listen to me. This is important to understand. When it comes to profit taking, it is never an obligation. These are rules, but the more appropriate word should be suggestions, really, because you don't ever have to take a profit. So these are rules that are not obligatory. This is a very important point to understand, traders. You are not obligated. You have earned the right to take a profit after 30 to or a 50-cent move, but you are not obligated to take that profit. You can decide, right? You can decide that, you know what? I'm going to let this ride. I think there's more than 30 to 50 cents in this move right now, and I think I can take partial profits at a higher level. So I'm going to back off on this first milestone that I've achieved. Now, here's where this is important. I want you to understand that in this world, when you are rich, you have extra rights. I'm going to repeat that. In this world, I don't know about other worlds. All right. I'm always saying this, we have yet to do intergalactic travel. I'll wait for that. But until then, I only know this world. And in this world, when you're right on this planet, when you are rich, you have rights that others who are not rich do not have. This also applies in the trading world. When you are rich as a trader, you gain extra rights. You gain rights that you didn't have before you were rich. You gain rights that a trader who's not rich doesn't have. So what do I define as a trader who's rich? A trader who's first achieved 30 to 50 cents. Now, let's say you're playing 1,000 share lots, which are my traders are being trained to trade 1,000 share lots, right? So that's a $300 to $500 gain. Boom. In a very short period of time. Maybe it's 2 minutes, maybe it's 6 minutes, maybe it's 8 minutes, whatever. But once they achieve that 30 to 50 cent gain, that's when I consider them rich, which means that extra rights come into play. What is the right? The right to take some off. See, they didn't have the right at 5 cents. They weren't rich at 10 cents. They weren't even rich at 25 cents in the money. So 1,000 shares gets the trader $250 and they're still not rich. No, I define rich by this 30 to 50 cent gain. Okay? And so after that 30 to 50 cent gain, they're considered rich, which means that now they have gained a right to take a profit. They did not have this right to take a partial profit before, but now they're rich. They have a right to take this profit. They've gained an additional right, but they have not yet earned the ultimate right. What's the ultimate right? The ultimate right is to take it all. Okay? So they haven't earned that. They're baby rich. The full rich is you can take it all. But they haven't earned that. So they got the baby rich right now. They got the new rich, the new money, not old money, new money, not old money, the young money, young rich. Okay? All right, you got this. All right, guys, let's go. All right. So now some might ask, well, Oliver, when is it appropriate for me to take 50 versus 30? Like, how do I know which one? Or is it just inside the range of 30 to 50? Well, you can range it. That's true. You can range it. So you can say anywhere above 30 up to 50 is my right to take a partial profit. Okay. But here's a very interesting guideline I want to share with you. I want to share this with you. Okay. Interesting guideline is this. If you have gained, if you are playing a stock that is under $50 in price, all right, I would suggest using the closer to the 30 cent rule, so 30 cents or more. But if you are trading significantly above $50, if you're trading a stock as $80, $90, $100, you should be using the 50 cent rule. That price is too high and has an alpha that is too high, a volatility statistic or rate that's too high to shortchange yourself with 30 cents. So I teach my traders as a general rule, if your stock is under 50, you're using 30 cents. If your stock is significantly over 50, So like if it's in the 60s or 70s, so let's use 50s as a whole. So 50 all the way through 50s, you can use 30 cents. Past the 50s, which means $60 and above, you use 50 cents. This will make sure that you are not taking profits too early. All right. So a 30-cent move in a stock under $50 is significant, but a 30-cent move in a $120 stock is not significant. Okay, so we have that $50 range as the midpoint. Anything from $50 range downward, 30 cents. Anything from $50 range and above, 50 cents. So if I were to write that here for you, we're going to do 50s. Okay, these are dollars, dollar price ranges. 50s, this is your 30-cent range, right? And below. So you've got the 40s, you've got the 30s, and you've got the 20s. Now, I would not trade less than the 20s, just so you know. All right. I don't like my traders trading stocks less than $20. The volatility is not there. Those moves that are significant just take a miracle to happen. I don't like them. It becomes more of a casino down there. Okay. So 20s through 50s, we're going to use the 30-cent rule to take partial profits. And then anything above, all right, 70s, 80s, okay, and above, you're going to use the 50-cent mark to earn your first baby wealth right to take partial profits. Now, let's say, for instance, you take here 2 lots. So in the world of 1,000 shares equaling 1 lot, that means you take a 2,000 share position. All right, boom. This is a $35 stock, as you can see. Boom, $35 stock. So we're using the 30-cent rule. Once you achieve this 30-cent goal here, you have the right to take partial profits, which means that you can only take 1 of your profits, not 2. You have not earned the right yet to take the whole position off the trade. Now, guys, listen to this. There are times, right? There are times when a trader is very proud of himself and says, Oliver, had a nice $800 gain today. Yeah, and says, I'm really proud of myself. And I said, okay, show me your trade. And we take a look at the trade, and I'm like, well, why are you proud? All right, you had 2,000 shares on this play, okay, and you took profits at 40 cents, and you're playing an $80 stock. So I know your result was 800, but you didn't earn the right to take profits. Why did you take the profits? And so the trader will say, but Oliver, it's $800. Do you know what I can do in my country with $800? It's like, I don't care what you can do in your country with $800. That's not the rule. You're still poor under, right, 50 cents if we're dealing with stocks in the $80 range. This has nothing to do with the economics of your country. This has nothing to do with what you can do with $800. This has everything to do with you being a disciplined trader and doing what you set out to do, doing what you're supposed to do, doing what you promised your own self that you were going to do. You got into this trade knowing full well that the rule is I don't become a profit taker until 50 cents, and you took profits at 40 cents. So what's going to stop you from taking profits at 30 cents, then 20 cents, then 15 cents, then 10 cents, then 5 cents? I've seen this happen over and over and over again. So I'm strict with them. I get on them. I make sure that it's the rule. It's not the money. We don't trade for money. We trade to be true. Tell me you understand this. We don't, as professionals, trade for money. I was about to say something derogatory. I held myself back. Thank God. We are above that. It is not money that we're trading for. We're trading to be true. We're trading to get the trade right. We're trading to be disciplined. We're trading to be excellent in our craft. The money follows being excellent in your craft. The money follows those who follow the rules and do not let money influence them. Even in your life, you respect people that don't let money influence them, that they're principled individuals. We're going to be principled traders. We're not going to let the dollars control us. Just because I had $800, I break my rule? No, no, no. All right? Just because you give me $800, I kill my brother? No. Same thing. Money is not going to make us unprincipled, undisciplined traders. I need you to understand this. We're going to be rule-based. We're going to be civilized. Okay? All right, just so you know. Yeah, let's do this. So we've got the first rule out of the way. Keep in mind, there is no obligation to take profits. You do not have to take profits. Now, this is interesting as well. Let me just touch on this for a bit. When might you decide that it's not appropriate to take a profit? You might decide, traders, you might decide that, you know what? Here's a guideline for you. If you enter this trade, right, and you get that, boom, that 30-cent gain, it's a $40 stock. Boom, you get that 30-cent gain like that. Don't take it. It's too fast. It's too violent. It's too abrupt. This means that it's just getting started. It didn't struggle to get there. It didn't take it wasn't carefree. It didn't take its time to get there. It just got there in a bunch, which means that it's not even close to being tired. It's just getting started. It's vibrant. It's young. It's alive. It's got more. Don't cut yourself short if you get that right away. If you kind of get that normally, you have the right. If you get it slowly, you certainly have the right. But if you get it right away, almost like, whoa, that was fast, don't take it. There's a lot more left usually in that quick burst to your first profit-taking right. So that's a very interesting little tidbit. I would write that down. Don't let that one go. All right.